A huge bombshell just dropped. Wall Street Palantir takeover. This news usually strikes fear into investors. But not this time. Having Wall Street around the stock might actually be good. This is exactly what we need to push Palantir higher than $40 per share. But wait, how can this ever be good? How is it even possible? Well, there are several layers to this huge update. Let me explain. Disclaimer. Lately, Wall Street has just released their biases when it comes to the companies they see as bullish. And within the tech sphere, they're choosing between Palantir and another tech giant, Nvidia. While it's true that this update could sound a bit on the bad side, there's a huge upside to this. But first, let's talk about why Wall Street is choosing Nvidia over Palantir. Palantir's stock is on fire. It's been added to the S&P 500, and the company has secured major deals with big names like BP, Microsoft, and Wendy's. So far this year, Palantir's shares have shot up 112%. That's a massive jump, which makes Wall Street's announcement a bit skewed. But it isn't entirely shocking that Wall Street chooses a different tech giant. Why so? Well, Nvidia's stock has done good too. Its stock has surged by 136% year-to-date. However, Nvidia's shares are down by nearly 14% from their peak over the summer. One of the main reasons for this dip is the delay in the release of Nvidia's new Blackwell GPU platform. This has caused some concern among investors. But the crazy thing is, despite this, Wall Street still favors Nvidia. So why does Wall Street prefer Nvidia over Palantir? A recent survey asked 60 analysts about Nvidia. A lot of them gave Nvidia good ratings and nobody recommended selling their shares. Palantir also fared well, but not as good as Nvidia. Most analysts felt Palantir was just a hold. And there's two of them who recommended selling its shares. Price targets for both companies tell a similar story. Wall Street's average price target for Nvidia shows it could rise over the next year. The most optimistic analyst believes Nvidia could soar another 73%. That's such a crazy prediction. In contrast, Palantir's price target is just roughly 25% lower than its current share price. Even the most optimistic forecast only sees a potential 37% gain for Palantir in the next 12 months. The final reason Wall Street favors Nvidia comes down to growth. Both companies are growing fast, but for them, Nvidia is doing it in a way that analysts believe is more significant. Nvidia dominates the GPU market, and its next big product, the Blackwell GPU, is expected to be a huge hit once it finally launches. Some even think it will be Nvidia's most successful product yet. For Wall Street, Nvidia is also playing in a much bigger market. AI is growing fast across almost every industry, and Nvidia's products are in high demand. Palantir, on the other hand, gets more than half of its revenue from government contracts, which to them limits Palantir's market opportunities. Wall Street also sees Nvidia's stock as more attractively priced. While Nvidia's forward earnings multiple is high, its growth projections make the stock a better value than Palantir's. In short, Wall Street likes both companies, but Nvidia is still the clear favorite. However, these are all just the opinions of Wall Street analysts. You can already research for yourselves how these predictions usually go. And on the other side of things, Wall Street choosing Nvidia over Palantir could also be really good for the company as mentioned earlier. As you already know, when Wall Street's attention is on a specific stock, these usually come with negative things too. These could range from market manipulation to heavy criticism of the company and their stock price movement. And you already know that Palantir had their fair share of these things. But now that Palantir is finally free of Wall Street's scopes, they could move according to their plans. And they could do this without the prying eyes of Wall Street. This is such a huge win for Palantir. They're now like a bird whose cage just opened wide. This might even be one of the reasons why Palantir's price movement today went insane. Everybody's talking about the company's new all-time high price. As a user on X shared, Palantir just broke $40. But wait, before Palantir holders can celebrate, they need to know that there's a looming danger ahead. There's still another terrifying update that could switch everything up, and this could push Wall Street back into Palantir. You know what this means. All those negative things that come with it might also be experienced by Palantir again. So, what's this update? Apparently, the US government is raining down on Nvidia, and this could have tons of implications to Palantir. Let's talk about what Nvidia did. The US Justice Department and the Securities and Exchange Commission are now involved in a class action lawsuit against Nvidia. The tech giant is being accused of hiding sales linked to cryptocurrency mining. On October 2nd, a brief was filed by U.S. Solicitor General Elizabeth Prelogar and SEC Senior Attorney Theodore Wyman. So what did Nvidia do? The plaintiffs allege that Nvidia concealed more than $1 billion in sales of its graphics processing units to cryptocurrency miners. They claim that Nvidia's CEO, Jensen Huang, didn't fully disclose how much revenue came from these sales. Nvidia has consistently denied the accusations, saying the lawsuit is based on incorrect data and misleading information. But the DOJ and SEC disagree. In their brief, they supported the class action group, saying the investors' claims are credible. Now Wall Street might look at this and think otherwise. The previously mentioned bias of Wall Street towards Nvidia might be flipped. And because of this, Palantir could be on the scopes of the whales in Wall Street again. And all the market manipulation, heavy criticisms, and the pulling down of Palantir's stock could come back again. But hear me out first. This might not be the case this time. I know Wall Street has a reputation of potentially doing these things, but this time, they might be on Palantir's side. They could be on a mission to pull Palantir's price up. Why would they do this? Well, for one, Wall Street wants to see growth in stocks they invest in. If Wall Street has a strong influence over Palantir, it likely means more institutions are buying its shares. And this is evident in how Palantir's stock price moved in the past few days. When the insiders and retail traders sell their stocks, tons of institutions are actually catching the available shares. Big investors want to see the stock price rise so they can profit. This could lead to more support for Palantir and increase its market value over time. Wall Street's involvement also brings more visibility to the stock. When major funds and analysts back a company, it draws attention from other investors. And this is even better if the attention they draw is positive, which could lead to more buying. As more people buy shares, the price often goes up. For Palantir, this could mean stronger price movements in the future. Another benefit is that Wall Street tends to push companies towards stable, predictable growth. If Palantir is in its scopes, the company might become more focused on delivering consistent earnings. This could make Palantir a more attractive investment for large funds, leading to even more buying. Wall Street likely wants Palantir's price to grow because the company is in a high-potential industry. Palantir is deeply involved in artificial intelligence and data analytics, areas that are expected to keep expanding. For investors, this means big returns over time. As long as Palantir continues to innovate and grow, Wall Street will have a vested interest in seeing its stock price rise. But that's not all. Even Palantir themselves are pushing for their company to grow even higher. They're not relying on Wall Street for their company to grow. In fact, Palantir has acquired $1.5 million worth of shares in Surf Air Mobility. This move signals a potential strategic collaboration between the two companies. This matters because Surf Air Mobility is part of a changing air transportation industry, and Palantir's investment shows it's aligning itself with this evolution. The collaboration could allow Palantir to bring its powerful data analytics to Surf Air, helping improve efficiency and decision-making in air travel. What's more is that this could help push their earnings higher. But this is just the tip of the iceberg. This stake could also give investors more confidence in Surf Air Mobility. Palantir's reputation and involvement might make the company more appealing to the market. Many observers are excited, as this suggests that Palantir and Surf Air might integrate their services. Such a partnership could lead to innovative developments in air mobility, boosting both companies' potential in the eyes of investors and market watchers alike. But what do you think about this? Let us hear your thoughts in the comments. If you are curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed the video, please like this video. And don't forget to leave a comment in the comment section. This really helps me with the YouTube algorithm. Also, please share this video with as many people as possible. Let's get this news out there.